course, you broke this story, Greg, back in April. Jamie Dimon on the call said he wished he'd, been reading newspapers to pay attention to this. He was referring, of course, to your story. Now, let's jump in here. Let's talk a little bit about how did Bruno Iksil earn this nickname, Caveman?
Right, so we all know him as the whale, meaning that he got so big, people refer to him as the London whale. He was buying so much betting on corporate health, basically, and he got so big in the market, in the derivatives market, that people call him the London whale. Before that, the end of last year, he actually made a different kind of bet, and one in which people were very dismissive on Wall Street. They called him a caveman because he was basically betting, it was a very bearish bet, against junk bonds, but basically betting that there would be a default in a matter of months, and it seemed like free money for people on the other side, the hedge funds, and they kept coming, and he kept selling against them, and then he ended up winning out $450 million or so in just a matter of months.
We have a full screen coming up here that shows some of the bets that he made. Now, what's interesting here is we're talking about a bank taking bets that Kodak, Dynegy, AMR, some of these are corporate names that he thought was going to go bankrupt. My big question is, how does that qualify as a hedge? What are they doing making these bets?
You can make an argument that, well, they're long credit as a bank, so they were short credit through this junk bond trade, but it was more of a short-term bet because it was expiring December 20th, so they had to really have some offsetting risk that was going to expire December 20th, which is really impossible, and looked very much like a bet rather than a hedge.
And I think as this story develops, Greg, is that we're seeing that we're not talking, everybody talks about the $2 billion loss because that's a thing that affects JP Morgan's bottom line. It talks about the safety of banks. The reality is that this kind of trading has been going, this guy has been doing this for years. He's been taking these enormous bets on either side.
These trades actually worked out. This is one of the key issues here.
We only hear about it when there's a blow up. The reality is that the risk is being taken over long periods of time in different, and he makes $450 million here, he loses $2 billion here, all of a sudden it's a problem.
And Greg, talk about this. You mentioned, of course, in your story that some of these bets that people thought were really risky, Kodak, Dynegy, American Airlines, they actually worked out, and that may have helped empower him to take some of these other risky bets?
Yeah, that's exactly right. My understanding from my reporting is that he was so good and his group did so well that people like Jamie Dimon and the rest of the top executives at JP Morgan got really confident, maybe overconfident. There's a little bit of hubris that these guys can keep making lots and lots of money for the bank, so we're going to give them a long leash. It ended up costing them. And at this point, it's much more than $2 billion. We're thinking it's more like $3 billion. It could get past $4 billion, so it could get more dangerous. But the point is a good one, that is 4 years after the crisis when we as taxpayers had to step in and bail out or prop up bank after bank. So do we want our banks doing these kinds of trades?
Yeah, now I got to wonder, is Jamie Dimon returning your calls yet?
Jamie Dimon, I don't want to get into the reporting process, but there has been a shift. They were very dismissive of our initial story. They said, hey, we know about these trades. Jamie knows all about these trades. Don't worry, Greg. And now there's a different view that, hey, we should have been a little more concerned. So, better late than never as a taxpayer, I would argue. But it is a little worrisome that they had this group. That said, it's only been the last few years. So you had said forever. It's actually just since 2006 or so when Jamie and the bank transformed this group into one that was just buying treasuries and mortgages to doing other kind of things like CDS and junk bonds.